Baidu just made a move that could reshape who wins the AI chip wars. The Chinese search giant is spinning out Kunlunxin, its secretive artificial intelligence chip division, for a Hong Kong initial public offering targeting $50 billion in valuation. That's not just a spin-off, that's a signal. It means Baidu believes its homegrown chips can compete with Nvidia in one of the most competitive markets on Earth. And it means China is done waiting for Silicon Valley to solve its AI infrastructure problems. It's building its own. Kunlunxin isn't new, but going public is a statement. These chips power Baidu's search, Alibaba's cloud systems, and ByteDance's recommendation engines. They're already running in production across China's biggest tech companies. But until now, almost nobody outside China even knew they existed. That changes with an IPO. Here's where it gets interesting. If Kunlunxin pulls this off, it could be the first serious Chinese challenger to Nvidia's grip on AI accelerators. Not just in China, but globally. The timing is crucial. Nvidia's dominance has made the United States a choke point for AI infrastructure. If Chinese companies can build and sell their own chips without American export restrictions, the entire geopolitical calculus of artificial intelligence changes. And this is what nobody predicted. Baidu betting its future on chips instead of search, and doing it on the world's biggest stage. Kunlunxin started in 2016, when Baidu realized that renting Nvidia chips was eating into profits and creating dependency on American technology. So the company decided to design its own. It's a bit like Tesla realizing it can't rely on traditional automakers to build electric motors, so it builds them in-house. The name Kunlunxin comes from Kunlun, the legendary mountain in Chinese mythology. It signals ambition and transcendence. These aren't theoretical laboratory chips. Kunlunxin processors have been handling real workloads since 2018. They power Baidu's language models. They run Alibaba's cloud AI services. They sit inside ByteDance's servers processing billions of recommendation decisions. Think of it like this. When you use Baidu search and it shows you an answer instantly, there's a Kunlunxin chip somewhere in that chain making it happen. When you scroll TikTok and the algorithm shows you exactly the video you want to watch, a Kunlunxin processor might be part of why it's so eerily accurate. The thing is, these chips are optimized for Chinese AI workloads. They are tuned for language models and recommendation engines, not the full spectrum of AI tasks. But that specificity is actually a strength. It means they can be extremely efficient at what they do. Baidu has kept this largely quiet because, frankly, the company wanted to focus on proving the chips worked before facing international scrutiny. And here's what changes everything: that secrecy is ending. The global AI chip market is currently dominated by Nvidia. They control roughly 80% of the market for AI accelerators. But it's not just about market share, it's about ecosystem lock-in. Every major AI framework, PyTorch, TensorFlow, CUDA, is optimized for Nvidia hardware first. If you're training a cutting-edge language model, Nvidia is the default choice because all the tooling is matured and proven. That creates a powerful moat. But it also creates a bottleneck, and Baidu sees it clearly. Here's the thing: Kunlunxin's Hong Kong IPO isn't primarily about raising cash. It's about credibility and access. A publicly listed company can attract global investors, form international partnerships, and tap financing channels that a private division can't. It's the difference between being a secret internal project and being a recognized global technology company. The ambition is jaw-dropping. The chip is called Kunlun 3, and Baidu claims it rivals Nvidia's H100, the gold standard for AI training. If that's true, and if Kunlunxin can manufacture at scale, the entire competitive landscape changes. Suddenly, there's an alternative to Nvidia that Chinese companies can use without hitting American export restrictions. For Baidu's investors, that's attractive. For geopolitics, it's significant. But here's where the real story starts. If Kunlunxin succeeds, it doesn't threaten Nvidia globally tomorrow. It locks down the Chinese market first. Let's talk about where these chips actually live. Kunlunxin processors are inside Baidu's data centers right now, handling billions of search queries every single day. Every time someone searches in Mandarin and gets an instant answer, that's powered partially by Kunlunxin silicon. ByteDance uses them for TikTok's recommendation engine. the algorithm that's so accurate it keeps you scrolling for hours. Alibaba Cloud has integrated them for enterprise AI services. These aren't theoretical chips tested in a lab. They are production-grade hardware serving real users at massive scale. Here's the thing that matters. Baidu has 10 years of internal data proving these chips work reliably. They've already solved problems that other chip makers are still struggling with. Power efficiency is one, cooling another, and reliability under continuous workloads. That's not something you can fake in a spec sheet. The engineering is solid. Now, Kunlunxin has been available to some Chinese cloud providers and researchers, but in limited quantities. Going public changes that. An IPO means Kunlunxin can invest in manufacturing capacity, hire world-class talent, and build supply chain relationships outside China. It means they can potentially sell to international customers, though export restrictions might limit how many of those actually materialize. But the capability to try is itself a major change. And this is what the headlines aren't telling you. Baidu's confidence in going public suggests the chips are further along than most people realize. So how does Kunlunxin actually compare to Nvidia's H100? This is where things get murky because Baidu hasn't released detailed benchmarks, and Nvidia certainly won't validate a competitor. What we know is this: the H100 is the workhorse of modern AI training. It has 141 gigabytes of memory, can do roughly 1,980 teraflops of floating-point computation, and costs around $40,000 per unit. Kunlunxin reportedly has less memory, somewhere in the range of 64 to 128 gigabytes, but potentially better energy efficiency. For certain workloads, especially language models optimized for Chinese, Baidu claims competitive performance. Is it actually equivalent? Almost certainly not yet. But that's not the point. The H100 is overkill for many tasks. It's a Swiss Army knife when you just need a hammer. Kunlunxin is purpose-built for specific Chinese AI applications, search, recommendation engines, language models trained on Mandarin text. For those uses, it might actually be better, faster, more efficient. That's the strategic angle. Nvidia sells globally to everyone doing AI. Kunlunxin is building for China's needs first. Different markets, different requirements. The real competition isn't Kunlunxin versus H100 on every metric. It's about whether Chinese companies can achieve independence from American chips. And that's what changes the game. But here's where it gets complicated. Manufacturing at scale is a different beast from proving the design works. This IPO isn't just business, it's geopolitical. For the last 5 years, American policy has been to restrict AI chip exports to China, blocking Nvidia's most powerful accelerators and AMD's latest processors. The idea is simple. If you can't get cutting-edge chips, you can't build cutting-edge AI. But Baidu's move suggests that strategy has limits. If Chinese companies can build their own chips and sell internally, export restrictions lose power. They won't stop Chinese AI advancement, they'll just redirect the supply chain inward. That's worse for American leverage. On the flip side, it's better for Baidu's shareholders and for Chinese tech companies starving for AI infrastructure. The implications ripple outward. If Kunlunxin succeeds, other Chinese companies will invest in their own chips. More fragmentation, more self-sufficiency in critical technology. For Europe, this is a wake-up call. If China can build AI chip independence, why can't Europe? That conversation is already happening. There are initiatives to build European AI chips, but they are behind. The overall effect is a splintering of the global chip market into regional blocks. Instead of one unified AI infrastructure controlled by American companies, you get China building for China, Europe catching up, and the United States still leading, but without monopoly power. That's the new reality. And this is what nobody predicted. The IPO isn't about proving Kunlunxin beats Nvidia. It's about proving Chinese companies don't need Nvidia. Let's unpack what a Hong Kong IPO means. Hong Kong is one of the world's 3 biggest financial centers, New York, London, and Hong Kong. It's politically convenient for Chinese companies because it has mature financial systems, transparent regulations, and global investor access while remaining under Beijing's control. An IPO means listing shares on a public exchange, the Hong Kong Stock Exchange. and selling ownership stakes to investors. Baidu targets a $50 billion valuation. Selling 5% of Kunlunxin to public investors would raise roughly $2.5 billion, going directly into chip design, manufacturing, and talent. The process takes months. Baidu files prospectuses, undergoes audits, gets regulatory approval. Then comes the roadshow, executives pitching investors. Then IPO pricing, where the exchange sets opening share price based on demand. Then trading begins. What to watch is the opening price movement. If it jumps 30 or 40% on day one, investors are confident. If it struggles to find buyers, investors doubt the technology. The market assessment reveals whether global investors actually believe in Kunlunxin's potential. That validation matters for recruiting, partnerships, and future fundraising. And this is the kicker: if the IPO succeeds and the stock pops, it sends a signal worldwide that Chinese chips are a real threat to American dominance. So here's what matters. Baidu's decision to spin out Kunlunxin and take it public is a watershed moment for AI hardware. It signals that the era of American monopoly on AI chip design and manufacturing is ending. Not ending tomorrow, but ending. This isn't about Kunlunxin being better than Nvidia right now. It's about proving that companies outside the United States can build world-class AI chips. That changes the entire geopolitical equation of artificial intelligence. It matters for you because it means AI infrastructure is becoming less concentrated, less dependent on a single country's decisions, and more competitive. More competition means faster innovation and eventually cheaper AI tools for everyone. But it also matters because the next 5 years will determine whether China successfully breaks free from American chip dependence. If Kunlunxin pulls this off, other countries will follow. Europe will move faster on its own chips. India might enter the race. The global AI landscape splinters from centralized American dominance to distributed regional innovation. That's profound. Here's what to watch for: follow Kunlunxin's IPO closely. Look at the opening price, the first month of trading, the customer announcements that follow. Every milestone tells you whether this company can actually execute or whether it was just clever messaging. The stakes are high, the technology is real, and the implications are global. Follow for daily AI news.